can see this group.
Hey folks, today is October the 10th. It's currently 9 o'clock in the morning. We are now in the fxsimplifier trade room, as you guys can see here. Let's go ahead and take a look at the chart really quick. As you can see, we have two trades on, one on the AUD and ZD. Currently up about 16 pips on that one. And then another trade on the AUD and ZD, or actually the Euro USD, excuse me. Let's take a look at that. Actually, there's the entry right there. All right, so we're up about 30 pips on this particular trade. So this is a pretty good start to the week so far. Let's see if we've taken any trades already. Not yet. These are our first two trades of the week, it looks like. All right, so what we can do now is let me fix this real quick. One moment, folks. All right, so now we can go ahead and jump back into the trade room, listen to what they have to say, and watch how they choose to manage our trades here.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
Try to let it ride longer, right? Like, we bumped the stop up already once or twice now.
Just one raise. Yep.
But now, you have a little bit more leeway before it even comes down to break even, let alone to negative. So you can give it some room, and then, you can give it more time to work out. And what that does, one, it tends to improve your risk reward, not always, but it tends to make it so you can stay in for a longer term profit type thing with slightly less and less, risk as time goes on as you bump up your stop more and more. And it also allows the market to do its thing. I don't know a better way to say that. I'll explain what I mean, though. The market to do its thing. So nothing goes up or down in a straight line, right? We know that. Look at any chart. And other than Brexit, and again, that wasn't really a catchable move per se. There was no trading in that gap. But other than Brexit, like it's rare when anything goes up really, really, really big in a straight line or down really, really big in a straight line. Most trends take a little bit of time to work themselves out, right? So if you can get up on something pretty quick, then you can kind of sit on it and see what it can do. Now, sometimes you won't want to do that. Sometimes you're going to want to take your profit, and that's fine too, what have you. But I guess I'm giving you one way to play that, right? One way to play that is you let it kind of do its thing. You sit on it. You give it time to fluctuate. You move up your stop some, but you don't want to get too aggressive on that, or you're almost going to get stopped out for sure type thing. And that way you can try to ride it for a lot bigger gain. If you don't want to do that, that's fine. Again, when you're up on, you're up 10, 20, 30, 40 pips on something, you can bank that. There's nothing wrong with that. But if you think it has more potential and you want to try to sit on it, a lot of times by giving it a little bit more room, giving it more time, you can get a lot more out of it. So, because, what we do know is, an uptrend, what's an uptrend? A series of higher highs and higher lows, meaning that it goes up, it pulls back, it goes up, it pulls back, but it's 2 steps forward, 1 step back. And that's what allows it to be an uptrend. Whereas a downtrend, I guess, would be 1 step forward, 2 steps back, whatever, and that's not going to work as good on a downtrend. But by being patient, I guess, is another way of saying that. That's probably the best way to say it. But being patient on a trade, a lot of times you can get a lot more gain out of it. So I don't know. I like it when I can be up right away on something, because then I feel comfortable sitting on it and I can go look for other risks to take on. Whereas if I'm not up on something, if I have more than like 2-3 things out there that I'm not up on, then it's a lot harder for me to start putting on more things. I don't like adding on extra risk when I already have lots of open risks out there.
This trade is, as I watch this, it's pushed a little bit higher. As Tag's been speaking, currently according to my feed, 1.0667 and change. So this is just about 3 pips away from the lower end of the target. If I sense, I'm just letting folks know, if I sense that it's about to finally take a real breather and back off significantly, I might consider just this the area of the lower range of the target. In other words, we're very close. Obviously, I will let you know if I think that. I'm watching it closely. I'd love to just see one more just a little bit of a push on this run without having to sit through a lot. But we'll see. I'm just sharing my thoughts as it tries to push a little bit higher, seeing if we can get up to that 1.0670 area. 705 is the lower end of that target, as I just had it on screen a moment ago. So keep focus on this for right now. We will move our attention elsewhere fairly soon. But right now, with this close to the lower end of that target range, I'm going to keep focused on it.
Yeah, I got a question in the question box about, can I still get in this trade? So obviously you can, but basically the way I would do it, and when I say obviously you can do whatever you want. Okay, we're not your investment advisor, per se, and all that. And so, but what I would say, what I would do with my account is, if I came in and I like to trade, well, if it's at or below the entry price, or if it hasn't been triggered yet, if you like it, hey, why not, right? But if it's at or below or within a couple pips of it, then it's a lot harder. I don't know. Maybe you do, maybe you don't. When it's already taken off, just wait for the next one, because now the risk reward is night and day worse for you. Like if you were to get in here, you're adding 10, 15 pips between here and your stop from what it already was. And so your risk reward night and day is not nearly as good, not even close. And so on those, I just say wait for the next one. You can do what you want. If you love it, go ahead, do your thing. But if it was me, I would not. Because again, it's already run. If it ran 1 pip, maybe I'd jump in. 2, 3, maybe, but less and less so. 10, 20, no, not a chance. Not on a trade like this. If you're looking on something that, on a longer term swing trade or position trade, macro trade type thing, maybe you pay up 5, 10 pips. But on a day trade, you don't pay up 10 pips.
Correct. This is closer to exit. This is very close to the lower part of our target exit range. And as I just mentioned, I'm watching this closely. I just put into the chat, likely doji candle, 15-minute chart. This is perhaps likely isn't the best word, possible doji candle, 15-minute chart. In other words, it's just having a little bit tougher time trying to push higher right now. Watching it closely, see if we can just push into the target range. If it can't, then it's a likely exit this area. So that all to say, closer to exiting than than entering a new position here.
Yep. Yeah, again, chasing something, again, it depends on your time frame, what your risk reward is, what you're looking to get out of the trade, right? So if you're putting on a trade where you look at it like, what's my realistic target?
Hey, Tag, sorry. I'm just, I'm doing an exit for this area, at least for the PIP room trade. And so I put that in chat and exited the position. AUD, NZD, this area, I think it's a very likely doji style candle forming on the daily, so it almost got to the and maybe it can still, by the way. I think this has a lot of potential as a pair to push higher today, but right now this is stalling just below the lower part of our target range. So hopefully that distinction is clear. If it's not, happy to clarify, but right now it's a doji candle. It's turned into a doji candle on the 15-minute chart. Now we still have 5 minutes before that candle would be official, and so it's likely to change. But I just see this stalling this area after a 1, 2, 3, 4, 5, 6 up bar move on the 15-minute chart, and just was hoping it could push into that 1.0670 area right now or very soon, and instead it looks like it's stalling. So those with more patience it could look for the target range, and it looks like maybe it can do it. But I don't want to take any chances here in the PIP room. A little bit more aggressive, a little bit in terms of locking in gains and so forth. But that area still, other traders who, of course, you're all trading as you see fit. Then you could look for that. tag. Plus, it was it even plus 16 even
plus 16 exactly.
Okay. All right. So plus 16 pips on that trade idea. I'll just put the on that sheet. I'll put the, since I don't have a target or exit in pips. That's what I'll do. I'll just all right, 16.
Well, do you need an exit on there for that math on the sheet, or
say again, Tech?
So entry. Your exit was 1.06647.
Okay. Perfect. So that was the exit. I'll turn the status to, I just put in the pip total there as exit because I have a field for that, but I'll change status to close gain. Those who are still in it, obviously trade as you see fit, but I think that target range, if you're more patient than I was, you can look for that target range is pretty reliable. That is based on prior daily push and an area where I think this could struggle. So for those who are still in it, let me show you that area. Just basically, you've got an area of significant both trading range where it was stuck in this range, as well as pushes into it that failed 3 different times. Okay, so we're 2 different times, depending on how you read this chart. So I think that area.
All right, guys, we're now past the 10-minute mark. As usual, I'm going to go ahead and pause it right there. Let's go ahead and take a look really quick. It looks like they closed out one trade. All right, so they closed out our AUD and ZD for $35.92. And we still have our Euro USD trade open. And that is up about 30 pips right now, about 25. All right, so I'll go ahead and pause it, and I'll come back a little after 10 o'clock, and we'll see what this trade is doing.
Time and not new highs, right below them.
All right, folks, just wanted to come back so we can take a look at our charts here. Just an update on time is 10:08. And on this particular trade on the USD CAD, we have about a 32 pip stop, and we're pushing down towards that. But I wanted you guys to see that those 2 trades we were in already closed for a profit, one at 63.30 and the other at 35.92. So we'll see what this trade does. Hopefully it will turn around here. We're about 10 pips away from hitting our stop. We'll continue watching this. Hopefully it'll turn around, like I said. Just have to be patient and see what happens.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
Right. And typically, most people, for the most part, learn more from their mistakes than they do from their successes. But there's value in both. Because even on the success, you're like, what could I have done better to maximize that even more? Well, sometimes there's stuff you really could have done. But on your losses, it's typically a little bit more clear what you should have been doing better.
So let's see. Will this auto calculate? No. Let's okay. So let's forget about entry. I'm making this real simple, folks. I'm just making a hypothetical equity curve, but oops. Okay, hold on. Okay, so hopefully. Interesting. All right, let's see if I can get this to work. Didn't like one of the things I did. Bear with me for a moment.
Yeah, no problem.
Okay, so what you'll see, I'm about to bring this up, but what you'll see is a basically a blank list of trades. or maybe I'll put a few trades to start, and then we'll continue. We'll just make up some equity curves, okay? And I think you'll get the point of how this would work. Just one thing I'm doing, it's not liking, so bear with me. Okay, well, let's just let's bring up this equity curve. Okay, so sample equity curve. This is completely hypothetical, and maybe I will make this bigger, a little easier to see. Maybe take up a little bit more screen space here. Whoops, where did that go? Okay. And so what we have here are 25 hypothetical trades. I'm going to actually erase some of them. Okay, and what we're going to do is let's bring the equity curve like this, make it a little bit easier to see. And again, these are all hypothetical, so that just means we're going to be talking about fake trades, all right? And let's say that we had, I'd like to erase some of these, like basically erase this curve. And, oh, you know what? No, I don't want to erase it that way. Let me just erase some of these. Okay, it's not liking something I'm doing, but it's relying on some calcs I'm erasing. But let's say our first trade, let's say we have a 20 pip winner to start, and then we have a 10 pip winner to follow, and we have a let's say we have another 20 pip winner, then we have a 5 pip winner, so we have a winning streak, okay? And this equity curve is liking the number of trades. All right, let's say that then we have here. I'm just going to make up something quick. Then we have a loser, and then we have a flat trade, and then we have another loser, and then we have, well, let's not make it so big right away. Let's minus 5 loser. Let's say the trading record is, the fake trading record's pretty good to start, 6 pip winner, then we have another minus 10 loser, and then we have a 20 winner. And
hey, while you're doing this,
yeah,
you're looking at a few things. One, you see that chart changing, obviously, as he puts in these wins and these gains. The top left of there, he actually has some trade stats, total pips, the number of trades, the percent won, the percent losers. And then you see down there, they're hypothetical, but you could be keeping track of your trades in the same way, where you're showing their gains or wins and their losses in all of this data.
Okay, and this the way this is set up, it wants me to, let's say, okay, this is hypothetical trades. Okay. All right. So maybe we can get rid of some of these. And we'll ignore the entry and exit columns for the moment. But okay, so let's complete this. It needs a few more. Let's say there was another flat. Anytime there's 0, it just means no gain, no loss. Let's say that's modest loser, minus 6 pips, and so on. So it kind of wants us to do a few more. Let's do 10 pip winner. Let's do 2 pip winner. Let's do minus 5 loss. So nothing really exciting is happening in the fake track record at the moment. It's kind of spinning our wheels, and let's end it as on a high. Okay, so and let's say that this This chart is good through. It's going off of another chart. Well, it's easier to do in theory than it is to build this quickly on the fly. But because I copied this from another place and I'm just trying to make it work. Okay, so let's back up for a minute and I'll take some of these away. And okay, right here, what you're seeing is a list of fake trades. Okay, and why wouldn't the win-loss, by the way, so 20 fake trades, okay, number of trades, 20. These are all fake. Total pips, in this case, gain, because it's a positive number, 75 pips over 20 trades. Okay, let's just say that that's what Trader X here has done. So Trader X has been gaining. Trader X has only won 50% of the time, according to these fake trades. Okay, so with a 50% win rate, how is Trader positive? How is Trader X here, this fake trader, even positive? Well, that's a mathematical formula, which I won't go into right now, but it's pretty simple if I were to show it to you. Basically, the simple answer is, the average winner is greater than the average loser. If the winning percent is only 50%, obviously, if the win and loss, average win and loss were the exactly same, then you wouldn't be making any upside progress. However, the win rate here is 50%, and the average winner better than the average loser. But the nuance here is that happens to have loss percentage too. So how could loss percentage and win percentage combined only be 80% total, right? I mean, a whole pie. If you look at a pie chart, it would be 100%. We only have 80% of 100%, so we're missing. Where do those other 20% go? Well, if I had a column for 0, flat, break even, whatever you want to call them, that list would be 20%. So it would all total 100% as in a pie. But I don't have that. I don't have that row for just flat trades. Any trade that was a 0, meaning no gain, no loss, which I threw into this fake list of fake trades. Okay, so we do have a running balance of trades. In pip terms, let's pretend that these are pips, right? So, which doesn't necessarily equal dollar, right? U.S. dollars or whatever your native currency is. That we're just talking in pip terms to be simple about it, because we're just trying to illustrate what an equity curve is. So you can see this trader got off to a really nice running start. All right, maybe I can even put some labels on this. Add data labels and. Okay, so this trader got off to a nice start. These labels aren't that great, but whatever. Okay, so got off to a nice start, got up to 55 pips. And maybe, I won't bother trying to put them on the peaks. But you got off to a nice start, ran right up to 50 pips, or 55. And then what happened? The trader started losing ground. Okay, a couple of losses. There's a winner, and wait a minute, now a bigger loss. And the trader at this point is down to maybe 35-ish pips right at this point. 36, actually. There it is, 36 pips. So that's called a drawdown, right? There's a drawdown. That is what when we talk about drawdown, that's usually what we're talking about, which is any decline off of one's peak equity, or in this case, pip count. So one drew down from a total of a new high watermark, so to speak, a new high in the fake pip account of plus 55, drew down to only plus 36. Okay, so that's part of trading. What you want to do is if possible, you don't want the drawdown to continue and just take away all your gains, right? You want the drawdown to be as shallow as possible while you continue trading and endeavor to get back to where you were, and ideally do what? Exceed it. Okay, so trader with these fake trades, this trader now reached a new high of plus 66 pips. Okay, so equity in pip terms high of plus 55, drawdown down to plus 36, and quick recovery. Just a couple trades, pretty good trades, let the winners run, probably is his philosophy. It got up to plus 66. Okay, then a couple, a negative trade, a flat trade, a little shallow drawdown, another modest winner brings to now plus 71. and then a flat trade, a down trade, an up trade, now plus 76. On a little winning streak, gets up to plus 81, and now the trader is in a drawdown. Now, what would happen if this trader abandoned, started using way wider stops and a new approach, and then started losing, right? Minus 22, minus 30, minus 10, and now look at the drawdown here, all the way down to only 13. You would have given back from plus 81. This trader, hypothetical trader, would have given almost all of it back down here and be only up 13. All of this effort, and then a losing streak of some magnitude, minus 6, minus 22, minus 30, minus 10, and which would be big losses compared to the prior losses. The prior losses, the worst this fake trader did was minus 10. The best this trader did was plus 20. Okay, now this trader has taken more risk, and suddenly now minus 22, minus 30, minus 10. In fact, we could even take those away. Let's take those away and take that losing streak away. And let's just say this trader did something and said, you know what, I'm going to risk a lot more in this one trade, and did minus 50. Okay, look what that does to the equity curve. Okay, it's now 5 times the loss that the trader was willing to take previously, and it can destroy the equity curve, at least temporarily, possibly permanently, but at least temporarily. And now this trader needs a lot of pips to get back just to break even. And that in an account, that can be, it's asymmetrical. If you draw down 25%, now I'm not talking pips, I'm talking percent, one's account declines by 25%, that trader would need 33% gain to get back that 25% he or she just lost. Okay, so that's the asymmetry of drawdown. You need more to get back to where you were when you allow a big drawdown. So this is the consistency. A couple points. Not allowing a loss that's a magnitudes greater than what normally one would risk is one part of having consistent equity curve. Sometimes things happen in markets which could just hand you a way bigger loss, right? There was just a flash crash on the pound. That could potentially be really bad for an account, okay, if one was on the wrong side of that.
All right, folks, I was trying to let them finish talking about what they were discussing here. But as you guys can see here, we did enter another trade, USD CAD. We did end up taking a loss on that first one for $77. Still in profit on the day, though. And we're going to watch this and see how it goes. So at this point now, we're already at 27 minutes. So I'm going to hold off and come back pretty close to the end of this trading session. They shut down at 11 o'clock, so I'll come back maybe 5 minutes before 11, and we'll wrap things up then. Be back momentarily.
Euro Kiwi. All right, awesome. Let's take a look at Euro Kiwi then. Let's get rid of the Singapore dollar. Euro Kiwi, we see US CAD, US dollar getting shellacked against the CAD. CAD, that looks like CAD improvement. So I'm going to get to Euro Kiwi. Let's just look at oil. Oil is even higher. Okay, so oil has been running. We looked at this earlier when it was kind of matching Friday. It was a slight bullish engulfing. Now it's a clear bullish engulfing on the daily. And CAD yen is probably doing pretty well. Yeah, this is one that I was looking at a little bit earlier as a possibility. That's phenomenal that it rallied to that extent. I really did not expect that. Okay, so let's look at Euro Kiwi, and I can see I'll bring up a larger chart. But first, very important to start with the priority of just understanding the daily context. Overall, this is a chart in a downtrend below its declining 200-day moving average. I mean, overall, this is not a great chart, but is it improving over the past few months? I'd say, yeah. You've got it recently made a new low early September, but not by much, and the bulls brought it right back. Bears tried to force it down again. Bulls said no. Bullish engulfing, slightly new swing high. Consolidation, relatively sideways, above a flat 20-day moving average. Bulls, boom, showed their hand again. A couple big days to the upside. Now it's just going sideways. Notice this is an area, a lot of prior highs in this area. Is it approaching this area after some improvement? I would argue absolutely. So is it anywhere near the lows of this bullish candle recently, last week, maybe a week ago, or certainly last week at some point? No, not even close to those lows yet. This looks pretty healthy to me in terms of not the overall chart, but the recent action and its potential to maybe clear this area of these prior highs and attempt to rally at least perhaps to this prior high. That's at least what I look for. And best case, maybe a test of the 200-day moving average. That would be quite a run. So that's my really quick analysis of that story and how it's unfolding. If you look at the intraday, and I brought up the idea of this 15-minute chart, and I said I would not be considering this because of the fact that the spread is so big in this pair. But here's a 15-minute base, and you can see, wow, a lot of price action in this area. Lots of price action. It failed there before, failed, gapped down last night, came back up. So it seems to have a buoyancy or some support, aggressive buyers in this area down here, the 1.555 area. Right now, it's holding in an area where it's held previously, which is in a range above or between basically this 1.5660 area. That point's a little bit above that, but most of these highs are below that. And and these recent lows, maybe about where the 200 MA on this hourly chart or this 15-minute chart is now, 1.56 period. So this is the range it's in. The bulls would want to see it break above these highs of the last several hours and make an attempt at least to get to this high, if not finally break out of this whole area. And this, if that happened, one would view this whole area as a very bullish area, because really, if you look at the advance that preceded this whole area, now coming back from kind of taking a larger perspective, this whole area saw a really big rally, and you haven't seen much of a retracement. In fact, this is where fibs could be very instructive. Let's just do that real quick. Going to a very brief little mini lesson. If I can get this low. Okay, that's close to that low. Let's get it up to this high here, and let's see the extent to which this pulled back. These are a fib retracement tool. I'm sure many out there already use this, or at least some do. Others might be like, what? Fib of what? So since we're right at 11 here, I can't go into it in any depth, but this retracement level is much watched by proponents of Fibonacci retracements. I just made it a little bit bigger, this 38.2% retracement. What does that mean? We'll take the whole last rally, add these lines, and it will divide it into these ratios, which create these percentages. And there's a lot of history and theory behind that, and philosophy even. I can't address that now, but this is a very common retest. A strong market usually doesn't come much past this 382 or 38.2% retracement of the last rally. And this is a really good example of that. We see buying indications, these lower shadows again. Even last night, it looks like it might have come close to that level or tested it, and has bounced back. So that's usually a sign of a pretty bullish market, and that's just yet another thing I would add to my analysis of this pair that, again, spread I don't like here. This is not as strong a performer as AUD-NZD, which we just had as a trade idea, but all that said, this is a pretty bullish formation. Tag, before we wrap up, do you have any thoughts on that?
No, I'd agree on that. And actually, one of my favorite things for fibs is to kind of try to figure out how good a consolidation is. You know, in this case, it was a strong move up. But obviously, you can eyeball it. It obviously looks like it's been pretty strong. But if you stay within those range, stay within the top 25, stay within the top 30% of the range, it's that much more bullish for me. Like, it's obviously showing enough strength. Every time it starts dipping down, buyers keep coming in. They're not letting it go lower. And so, that's a good thing. Same with, when you're shorting it, same type of thing, except on the downside. It's like if it's not able to really ever rally up, or in this case, rally down or move lower, then that's a good thing for that trade. So.
Yeah, I think that's a good extra thoughts. I would say also those lines have no special intrinsic power. Some people would say they do. I would say no. They are very good at telling you about the price action and giving you a framework around which to view the price action. So that's just how I view it. But well, beautiful, folks. Thank you for being with us. We did kind of a half trading session today, very focused on markets. We covered some swing ideas to look out for across a lot of pairs, touched on some key themes like the last week's dollar strength and the big question of, can the U.S. dollar build on it? That's something that will be a theme again on Wednesday when we meet bright and early, 8 a.m. Eastern. We spoke a little bit about the pound flash crash last week and some of the history of that. And then, of course, we had a trade idea, AUD NCD, closed with a gain. We spent the last 45 minutes or so really diving into equity curve, crucial concept that, to me, if one were to start tracking it, employing it, and really learning from it, would have the effect of really potentially dramatically improving one's trading. So with all that said, thanks for being with us. We really appreciate it. We enjoy being with you, and we'll see you Wednesday bright and early. Thanks, Tag.
Yeah, see everybody.
All right, folks, that's the end of today's trading session. As you can see, we ended up taking, I believe, 3 trades today, 4. Had one loser here for $77.38. Not bad at all. So we are up on the day at this point. Hopefully we'll get a few more trades to end out the day, and hopefully come Friday we'll have another nice winning week here. So my next update for the Simplifier will be on October the 14th, most likely in the afternoon. All right, folks, that's going to be it. If you have any questions, don't hesitate to send them my way. And if you want to get signed up with the FX Simplifier, make sure you click the link below. Take care.